If we were into a mature precious metals bull market, the gold to silver ratio should have been at 40, at 30, yeah, at least. We're still up in the 80s, which is to me it's an indication that the bull market hasn't even started yet.
Hello and welcome. Thanks for tuning in today. I do appreciate it. We saw a noticeable pullback in gold and silver prices, but don't worry, folks, pullbacks are normal during bull markets. Here to break down the recent price action we saw in gold and silver is none other than the Silver Hermit. He is a market analyst and sound money advocate hailing from Israel. Oren, welcome back. It's great to speak with you today.
Thank you. Thank you for having me.
Oren, what do you think might have caused the pullback that we saw in gold and silver?
Yeah, so the reason for this pullback is probably due to the CME, the guys who are running the COMEX. They raised the margin requirements on gold and silver future contracts. They raised the margin requirements for gold by 5.5% and for silver by 8.5%. So, of course, you have traders who trade on margin, and when margin requirements are raised, then they need to bring more money from home, as we say. And if they don't have the cash, then they get liquidated, forced liquidated. So they need to sell, so the price drops. So this is a way in which the exchange can force the price down, and they quite often do that when they think the price is running too quickly. But we need to remember that the biggest drawdowns that we see are usually during a bull market. So
So
no
this is
fear. It doesn't necessarily mean that the bull market is over. Gold has like these two rising trend lines that could serve as support. And the first one, it will meet the first one at around $4,100. And if that one doesn't hold, then the next one, it will meet at around $4,000 per ounce. Now, I believe that round numbers have this psychological significance. So I think people will hop into the market if the price drops down to $4,000. So I think that's the most probable target for this correction. I think it's $4,000 an ounce, and that I think for those traders who sat on the sidelines all through this rally, I think that $4,000 an ounce will be a good place to step in, and so there's a good chance that we'll see a gold rebounding from that level.
we are in the fifth year of a silver deficit. Next year will be the sixth year. So any pullbacks, I see as a buying opportunity. The silver market is so volatile right now. So just be ready for anything, folks.
Yeah. Frankly, I don't know if this is going to be a quick dip, as though we're going to touch like 4,000 in gold and rebound and resume the bull market immediately. Or this could be like a lower consolidation phase in which gold and silver move sideways for a while and then try again to charge higher and set new all-time highs. And I don't know when exactly it's going to happen. I mean, like we could see new all-time highs before the end of the year, but then again, if it does get postponed till the end of the year, usually the end of the year is quite a weak period for gold and silver. Usually they start rallying again at the beginning of the year. So depending on the length of this correction, we will know whether there's a chance to see new all-time highs this year or whether we're going to have to wait till 2026.
The silver market is really tight right now. There are continued reports of dealers being low on stock to sell. Recent order, not all that big of an order. Everything is on back order for a month in that order. So I'm going to be waiting for a while to get that. And this is from one of the biggest dealers in the country. So the reality is that market is getting tight. Oren, what do you think about the stress in the silver market right now?
Yes, there are definitely signs of stress in the system. I mean, like, um, I think in our previous talk, we even mentioned some of them, but they are persisting. There is an arbitrage between the price in London and the price in New York for silver. As though the price in New York, the futures price, is always supposed to be higher than the spot price because there are, costs involved with storage of silver between the present and the future date that you're talking about. So the futures price is supposed to be higher than the spot price, but now it's reversed. And uh, last week we've seen this discrepancy go as high as $2.6, where the spot price is above the futures price. This is very unusual. I haven't seen anything like that in the past 30 years when I went to look. By the end of the week, it was closed a bit. It was reduced to $1.23, but there's still this arbitrage. Now, I do know that traders and are preparing to ship silver to London, from New York to London, in order to capitalize on that arbitrage, in order to earn that discrepancy in the price. And this is somehow supposed to help London deal with the shortages, because such discrepancy, it indicates stress. It indicates a shortage of physical silver in London.
Absolutely. Yeah.
Um, yeah, yeah, but I'll just say, but this means that it eats away at the inventories of the comics.
Right. Absolutely.
So
It's been
you
reported.
can move the silver around, but the shortage remains. If you see what I mean.
Yeah, I mean, you're just shipping the same bars back and forth at this point, and it's been reported that they've been flying the bars to London
Yeah.
to try and get them there quickly. And so obviously they're paying a premium to fly that silver. Typically, it's taken by boat, which of course takes much longer. So that's a pretty interesting situation that we've seen unfold. Silver's been getting a lot of attention recently. What do you think about this mania that seems to have started in the silver market?
So, we don't really feel it because we're in the West, and here people are not aware, almost unaware of gold and silver. But in the East, in places like India, there's an absolute silver mania.
Yes,
Jewelers in Mumbai had to stop producing, their jewelry because there isn't supply. There isn't silver. There isn't enough silver. We know that in India, in countries such as India, it's part of the culture.
right.
They purchase jewelry in order to give gifts to the bride, and this is not just ornamentation. The jewelry is supposed to be the basis of a new home. That's the financial basis of a new home, and they use gold in order to save. That's their savings. And since gold has become so expensive for them, they started switching to silver in recent years. And now even silver is becoming scarce. There are other accounts from other countries. We've seen lines outside the bullion store, the ABC bullion store in Sydney, in Australia. We've seen in Japan, there is a large bullion dealer called Tanaka, which suspended selling small gold items because they're inundated with customers, so they'd rather deal with the large customers. And there is also reports that local precious metals ETFs are trading at a premium to their net asset value, a significant premium of between 14 to 17% over their net asset value. That means that
Wow.
there is a huge demand for those gold and platinum ETFs, and the funds, they need to source the metal in order to justify all those, the capital inflows, and they don't have enough metal, so there is a premium to compare to their net asset value.
That's interesting. In regards to the folks in India, I think it might be a blessing in disguise for them because I do think that silver has more upside potential than gold in the coming years. And so having to switch over to silver, even if they feel, like maybe they were kind of forced to do that, it might end up actually working out better for them.
In recent years, I was kind of joking that India may turn out to may become the richest country on earth,
Yeah, I mean, they might.
simply because, households all across India, and also temples, by the way, because they give gold gifts to their temples, will become so incredibly rich that, perhaps they're going to start importing housemaids from America and from Europe to work in Indian households.
Yeah, who knows? Maybe you could go work on some rich Indian's yacht. If work starts to dry up in the US, you could go fold towels for them or something, or cook meals for them or something, and they'll be able to hand you real
It's going to
silver.
be the inverse of what we know, an inverted world it's going to become.
Right. The Bitcoin bros have been really active on X recently. I have seen a lot of posts recommending that gold investors sell their gold and buy Bitcoin. Oren, what do you think about the Bitcoin pumpers and what they've been posting recently online?
Yes, yes. We've seen an absolute, it feels like a concerted campaign to tell people that, A, this is, the top for gold. They've
Hmm.
declared a Friday as the top, as a blow-off top for gold, and urging people to sell their gold and buy Bitcoin. And, you
It
know,
does seem coordinated.
I don't know if it's coordinated or not, but they certainly sound desperate because Bitcoin
They do.
hasn't been performing so well this year, and it looks as though gold is eating Bitcoin's lunch.
Uh-huh.
And I think that they are well aware that Bitcoin and gold are enemies. And if there's something, any asset that has the potential to kill Bitcoin, it's gold, perhaps
Yeah.
even silver.
Hmm.
Because the way I see it, the only reason that Bitcoin exists and the only reason it has grown to such an extent is because during the past decade, gold and silver, they didn't perform too well. In spite of all that inflation, in spite of all the money printing that we've seen. And I think a lot of people who otherwise would be gold and silver stackers, they switched to Bitcoin because its price was rising, because it was performing. But now that gold is performing well, then that means that Bitcoin is no longer needed, perhaps. So we'll have to wait and see. I do know that those Bitcoin promoters and influencers on X, they are some of the most toxic people that I've ever met.
Absolutely.
It's like it's impossible to talk to them. It's impossible to even have a you know a cordial debate with them. They are extremely aggressive in promoting their favorite asset, and
Yeah, a lot
I
of them.
think they're doing, yeah, I think they're doing a disservice to their readers. I think if they don't hold any gold, by the way, I think they're doing a disservice to themselves.
It absolutely. It's really kind of tragic too, because in a lot of ways you see people investing in Bitcoin having similar goals to people that are investing in the precious metals. They're trying to protect themselves from inflation. They're trying to figure out, where to park their money, what will perform well. And when you do attempt to interact with these people, a lot of times they'll resort to name calling really quickly. They'll ignore any points that you're bringing up. Um, but yeah, it's interesting to see that going on online right now.
One of the things I just want to say, one of the things that they've been saying is that they expect once the rally in gold ends, they expect the capital to, rotate towards Bitcoin. And they point to, as a test case to what happened in 2020, as we all recall, after COVID started, gold and silver were the first assets to rebound after the crisis started, and they topped during the summer, if I recall correctly, and then Bitcoin and the stock market started pumping, and the rally in precious metals ended, and the capital indeed rotated into the stock market and into cryptocurrencies. And there was this entire frenzy around cryptocurrencies at the time. But I want to remind everyone that at the time, the Fed printed $5 trillion, and that was the liquidity which helped pump Bitcoin to new all-time highs. And also the federal government sent everyone stimmy checks. So everyone, all the retail, the potential retail investors, many people sat at home bored, so they started investing in the stock market and in crypto, and they used because they had enough money. They used the stimmy checks in order to do that. So, but now there are no trillions printed, and there are no stimmy checks. So I don't understand where is the liquidity supposed to come from. And also, I don't think that the rally in gold and silver is driven by Western retail investors. As we've said many times in the past, it's driven by central banks, foreign central banks in the East, yeah, and by Eastern retail investors. These are Indians and Chinese people who are buying gold and silver. It's not Americans. So I don't know why they think or on what basis they argue that there's going to be this rotation to cryptocurrencies. And I think they're going to be, they're in for a rude awakening.
I think you're right, and that's very insightful. The stimulus checks did seem to pump up the cryptos, and some folks were putting the stimmy checks into to some gold and silver, and then a lot of Americans just went out and bought luxury items. Unfortunately, they didn't invest that money wisely when they had access to it. And then the other thing
Yeah,
that
and now it's over. It's over. All that money has been spent, and
yep,
and the American consumer is now, is taking on debt just
right.
to pay the bills.
Yeah, absolutely. And we'll probably see more of that coming into the holiday season like we did last year. There was people taking out debt to buy their Christmas gifts, for
Right.
their friends and loved ones. So wouldn't surprise me if we see that again, unfortunately. And then the other thing too is industry. It wouldn't surprise me if we do see some of these big companies that need silver for their products decide to start going pretty heavy when silver has pullback, so they can stockpile it at a reasonable price. Because looking forward, the deficit looks like it's just going to be continuing. So some people are wondering if gold is near its top. If we look back at 1980 and what happened in that era, would history suggest that gold is near its top today?
Yes, so there was this video making the rounds on social media. It's a speech by investor Jim Simmons. Are you familiar with him?
I am not.
Yeah, well, he's one of those old timers. He was around investing in 1980, and he was talking about his experience when gold was rallying.
Okay.
And his one of his partners had money. invested in gold, and there was this point when Jim Simmons told him to sell it. And that person reluctantly sold it, and it was the tippy top. It was the top of the market. It got to $800 an ounce, and that person who sold reluctantly, it was good for him because then gold fell back down very rapidly. So
Interesting.
it gives you the impression as though when gold is topping, it's going to collapse very rapidly. But I think it's a mistake to look at the 1980s top as a reference to what we're supposed to see today. And I explained that, well, first of all, the 1980 top in the price of gold happened after an entire decade in which the price of gold was rallying. It started rallying in 1971 when Nixon got the US off the gold standard. And if you compare it to today, the current rally arguably only started in 2019. So it's a lot younger. And as a matter of fact, it only started in earnest. I mean, like the true bull market in gold really started at the beginning of 2024. I would even say that it's only 2 years old.
Sure. So
So
this,
that's one point. Like another point is that during the 1980s, the price of gold went up 20-fold. People forget, but it started at $41 an ounce and it went up all the way to 800. That's a 20-fold increase. Whereas the current bull market in gold only went up 3.5-fold when I compare it to the absolute bottom.
interesting.
Uh, yes. And one last point why you cannot compare 1980 to today is that in 1980 the Fed, yeah, led by Paul Volcker, raised interest rates all the way to 20% in order to try and stop inflation. And right now, if you look at the Fed today, they're not raising interest rates, they're cutting interest rates, they're easing.
Yes.
Okay, so they're not even trying to fight to make the dollar stronger to fight this rally in gold and silver. As a matter of fact, I think they induced it because if you look at the last breakouts, yeah, that happened at the end of August, it happened right after the Fed cut interest rates. So I think right now the Fed is pouring gasoline on this inflationary fire. I think they're pouring gasoline on the inflationary fire. And I expect the rally, I think the rally in gold is only starting. And I'll give you just one last indicator why I think this way. If I look at the gold to silver ratio, it hasn't even broken down yet. It's
Good
still
point.
at 80. It's still at 80. Like if we were into a mature precious metals bull market, the gold to silver ratio should have been at 40, at 30, yeah, at least. Um, we're still up in the 80s, which is to me it's an indication that the bull market hasn't even started yet. I think it's going to be continuous for many years. I think eventually it's going to be the basis of a new monetary system. So it's not going to collapse after it reaches the top. It's going to reach a certain level and it's going to remain in that high level because at that point, it's going to become money because it's going to be the basis of a new monetary system. So I think there's a lot of, they call it FUD. They call it, fear and uncertainty and doubt in the crypto sphere. They use this term.
Yes.
So we have some FUD in the precious metal space as well. I think people should surrender to these talks. I think the people who are saying those things, they've never owned gold, they've never owned silver, they don't understand precious metals. They're just trying to scare you away from precious metals because they don't understand them.
Right, absolutely. In regards to a new monetary system, with gold being the basis of it. We had discussed previously the gold-backed bonds and comments that had been made by Judy Shelton. And I would say I think we probably are going to see that happen next year. And it wouldn't surprise me if we do see gold get revalued, the gold being held by the US government. I'm not sure if they would market to market or if they would try and market above that or, what they might do. But I do think we are going to see something happen with that next year. So you
Assuming
consider that.
assuming that they have the gold, assuming that the gold in Fort Knox is still there,
We did not
then
get
that's
the
a
audit.
way. Yeah, that's a way to re-liquefy the system or pay down debt or reduce, the value of the debt compared to the GDP. Because if you're able to devalue the dollar considerably, but still, still have that gold as your core asset, that's a way to re-liquefy the system. But it's going to be devastating for households, it's going to be devastating for the little guy. It's going to mean they're going to get wiped out. I'm very sorry to say that. People need to protect themselves through having exposures, having physical gold and silver. It's just at this point, it's necessary protection.
Absolutely. So if you consider those things, and then on top of that, that gold had a 20-fold increase before it topped in 1980. Um, Gold has a lot of room to run. I mean, this thing is just getting going here. So we might see some pullback and consolidation, but over the next few years, it's just going to keep going up. I truly
Yes,
believe that in regards to gold and silver as well.
yes. People ought to remember it's a process. There are ups and downs. Yes, it's like the waves of the sea.
Right?
Uh, it ebbs and flows. The trajectory is up, but it doesn't mean that you can't have pullbacks. I think we are in the midst of a pullback, as I said. But if you're holding physical gold and silver, then you don't mind. You shouldn't mind because they stay at your safe. They stay put, and as long as you don't sell them, you don't really care about the day-to-day price action. So just hold on to them as long as you can.
Right, absolutely. Well, Oren, thank you so much for coming on today to discuss these topics. Everyone, please check out his links in the description to everyone who watched today. I appreciate each and every one of you. Please hit the like button and consider subscribing to the channel for more content like this, and we will catch you in the next video.